Hi, this is Michael Jones, Chairman and CEO of Caravel Concepts. Welcome to Market Insights, our weekly commentary on financial markets. Let's get started. Okay, it was a brief break from politics to be able to talk about Bitcoin, but back to politics, because there were some really important developments over the past week that, frankly, I think investors need to know about and take into account as they set their portfolio strategy. So first, let's all be grateful that we had yet another transfer of power here in the United States through democratic means. Wasn't very smooth, wasn't entirely peaceful, but I would hope that whatever your political persuasion, listening to Amanda Gorman made you proud to be an American. So, what happened for financial markets in the past week? Well, remember that the two most important policy makers for financial markets for the next 4 years are likely to be Jerome Powell at the Federal Reserve and Janet Yellen at the Treasury. We've described the two of them as a Dovefest, as a match made in market heaven, because both of them are going to be focused on policies that historically have been very friendly for asset markets. And they both gave very important speeches. And in the case of Janet Yellen, as a part of her confirmation process with the Senate, that gave really big insights in what they intend to do over the next year or two, and what those policies might mean for equity markets in particular. So let's start with Jerome Powell. Our thesis is that Mr. Powell's a dove. He is not going to be very focused on inflation, and he's going to give a lot of room for monetary policy to stay super accommodative, print a lot of money to finance a lot of budget deficits that in order to support the economy. All right. This week, he made two really important statements that supported that theme. The first one is he put out there, he said, there is going to be some scary headline inflation numbers in the next few months. As a matter of fact, inflation could be more than 4%, because last March and April, remember, we went through a lockdown. I'm sure no one can forget it. And during that lockdown, there was a big collapse in prices. Well, we're getting to the 1-year anniversary of that collapse in prices. Prices bounced back. So we're going to be comparing current prices to the low point of the pandemic lockdown. And that's going to mean that there's going to be big, scary inflation numbers. And Fed Chairman Powell said, make no mistake, we're going to completely ignore them. And we want you to ignore them too. So check one for being very accommodative to seeing scary inflation numbers and not worrying about them. Second thing is the Atlanta Fed President Bostic. He gave a speech where he indicated that he thought we may need to be thinking about raising interest rates, not in 2021, but maybe in 2022. And financial markets started selling off because of that. Because if you're going to raise rates in 2022, then sometime in 2021, you have to prepare for that by shutting down the printing presses and stop printing money. Well, Chairman Powell came in and said, no. It is way premature to even think about raising interest rates in 2022, because we're going to print a lot of money in 2021. So, two messages from the Fed chairman, very, very supportive of our thesis that the printing presses are going to keep rolling no matter what the inflation data looks like, and that's very supportive for equity asset prices. If you're a bond investor, not so much. All right, the other part of our thesis is that there's going to be real stimulus coming out of Washington, because the Biden administration is going to want another big stimulus package. The Biden administration has proposed a $1.9 trillion stimulus package. That's on top of the $900 billion that was already approved in the lame duck session. Now, in my opinion, President Biden has said he wants to be bipartisan. What that means is that he's not going to want to use these special mechanisms you can use to ram legislation through the Senate. He wants to go through the normal legislative process. That means he needs 60 votes. He needs 10 Republicans to sign on to the normal legislative process, because it takes 60 votes to advance legislation through the normal Senate process. Why is that important? Because it means 1.9 trillion isn't going to happen. It's probably going to be cut. Could it get cut in half? Absolutely. I think that's probably why he started with such a humongous number. So it could be cut in half, but when you add $1 trillion to the 900 billion that's already been printed, that is a heck of a lot of stimulus spending that's coming down the pike. And Janet Yellen, in her Senate confirmation hearings, not only did a fantastic job of defending the need for that, she also poured cold water on the notion, the one thing that people have worried about that could affect equity markets because of the Biden victory is that they could be raising income taxes and corporate taxes. And Janet Yellen, in her Senate confirmation, she said, whoa, whoa, whoa. Economy's way too weak to be thinking about tax increases right now. So we can push that down the road. So we get big stimulus right now, and if there are tax increases, she's definitely signaling that's not a 2021 situation. And if we were to consider tax increases on corporate America, and we are at some point when the economy can handle it, it would be a funding mechanism for a giant infrastructure spending bill. So she seemed to connect any increase in taxes with a big increase in government spending that would partly offset some of the negative effects of the taxes. So we step back from both of these political developments, both what Jerome Powell, the Fed chairman, was saying, and what incoming Secretary of the Treasury, Yellen, we look at both of their testimonies this week and we say both are completely supportive of our thesis that we're going to get a big injection of printed money in 2021. The fundamental economy is going to get support from very, very big stimulus spending, and the combination of another wave of printed money with the support that the fundamental economy gets from the stimulus, with vaccines getting hopefully more distributed, more shots in more arms, by the back half of the year, we have the two things that lead to a bubble: the wave of printed money, and a fundamental rationale for higher prices across the entire equity market, which is a powerful economic recovery. Thanks for joining us for Market Insights. We hope you found it helpful. If you'd like to see more of our research, you can subscribe at the link below, or you can look at our website, caravelconcepts.com. Thanks.